Welcome back to the channel. Following our marathon live stream yesterday as we followed the crash on Bitcoin and cryptos, let's take a look at the aftermath of what has happened over the last 18 to 24 hours for cryptocurrencies. Now in this video, I want to have a look at the bottoms, where we're looking for the bottoms. How much further do we have to go, and answer that question with some maths. So make sure you've smashed up the like button, new all-time high. Thank you for your support on the channel, and of course subscribing to the channel so you can be updated with the cryptocurrency news and charts and not getting screwed by the hopium out there. This is your hopium free crypto and real estate cycles channel. Do that right now. Okay, let's crack on with the video. Fear and greed, obviously at some of the lowest levels in history of this index. The lowest reading was 5 back in August of 2019. If we throw on the max here, we can see just where that came in. So it's back here on this date, and we are now sitting at 6s. So we haven't had 6s in some time. This is pretty much the lowest area that the market's ever been in for the fear and greed index. And of course, the best times to be buying are when the markets are extremely fearful. And of course, that doesn't mean that we're going to get the exact bottom, but it is far, far, far better than buying when everyone is in a greed zone, extreme greed, or even in a neutral feeling. These extreme times are the best. And yes, there can be further downside because we're looking at mega multiples to the upside. So we have to be ready to stomach a 50% loss from some of these prices, because the upside can be 5 times, 8 times, 12 times what we're purchasing the price now. And like we saw with the previous cycle for Bitcoin, that was just over a 20x from the extreme fear that happened in 2018, 2020, and then we got those multiples up to the $69,000 high. Now, a quick shout out to today's video sponsor. Yes, it's a great sponsor of the channel. This is Bybit. If you guys want to get a new exchange and spread your risk across different exchanges, if you plan to be trading cryptocurrencies, then check out Bybit. You can get up to $4,100 of sign-up bonuses using that link down below. And if you do want to trade on leverage, make sure you are an experienced trader, have some stops in play, have a plan that you have tested and that you are confident in. Now, you can trade spot, so this is open to anyone that is trading, buying and investing in cryptocurrencies. Links in the video description will give you those sign-up bonuses, so check those out. Now, over to stablecoins, because we have quite a lot of numbers to do here. I'm going to get through all of this, looking at a 30% loss on the total cryptocurrency market caps, and we're taking into account here Bitcoin, ETH, stables, and of course altcoins. So looking at the entire market cap, stablecoins are sitting at about 155 billion. They really haven't dropped in terms of total market cap while the market has been falling. You know, we're sitting at around 180, and then it's slowly fallen while people have been taking profits out into fiat. You know, these things occur. I'm sure you've been taking some money out into fiat, at least, I hope, because you just don't know what's going to happen with stablecoins. We don't know what's going to happen with these lending platforms, and of course your exchange as well, which is why I like to spread my risk across different exchanges. Exchanges that have been around through bear markets are usually a good sign as well. Total market cap about 850 billion, but if we take a look at the chart, the current price is 804. So CoinGecko gives us just a slightly different figure here, but I'm going to use my charts, use the 804 billion over here. Total market caps. Now, we're doing all of this to figure out the bottom zone for Bitcoin, ETH, altcoins. Bitcoin is at about 353 billion. So for the round numbers, I'll use about 360 billion. ETH about 116, so about 120, and you'll see that in just a moment. Why? Just to make some numbers easier to give us that bottom that we're looking for here. An interesting fact about the total market caps: half of the total crypto market cap, excluding Bitcoin and Ethereum, is in stablecoins. So we know that the total market cap 3 is about 330 odd billion at the moment. We saw the low in at 320. And if we take this reading for all of the stable coins, about 155, that's about half the amount is in stables, while the other half is in altcoins. And so as this market continues to fall in value, so the total 3, which is all of the altcoins, including the stables, but not including Bitcoin and ETH, then we will probably expect that the majority of the money is going to flow out of altcoins, which is why we talk here on the channel. Regular viewers know that we don't like altcoins in bear markets. I don't think there are any chosen ones in the altcoin market. Not Cardano, not Solana, not AVAX, nothing. None of them are chosen ones. And if you're looking for something to be the next big greatest thing, I'd probably go with something that is proven and stable and makes profits and is boring, like Binance. In terms of the coin, I'm not saying that you have to go and trade on there, but in terms of the coin, it's actually holding up and doing relatively well against its BTC value, its ETH value. I mean, of course, the US dollar is down, but in terms of those, it's holding up relatively well. And that would then be one of the major altcoins that would then hold up this particular reading here, which is at a total of 320 billion. So the overall market cap's 800 billion, total 330 billion. Bitcoin is down now. So the aftermath, we're now sitting at about 18,000 or so dollars. If I take this off here, we can see we're at 18,500, call it 600, and the low came in at 17,567. So basically 17,500 is the current low for the Bitcoin price. And on the weekly chart, it's not looking too bad. We've got extreme volume here. Obviously, we had extreme volume in May as well, and the market has broken down from that point because we did not get any bounce. That's the confirming factor here. The bounce was terribly weak, and that's that weekly bounce just there. That was a tiny green bar up with a very low close. The confirmation was not there for a strong, long position to take us to 34K and break above 34K. It just wasn't there. And you can see that in the chart. That's what we talked about. But now we're getting some good volume again come through. We need to see a low in place and then obviously a good bounce to hold us above some resistance levels. So to the downside, some of these bottom areas that I'm looking at, which then go into the cryptocurrency market caps to look for these lows, we're going to add this all together. Looking at about 16,200 and 12,500. These are just some levels looking back on the chart, looking back in history where the market has found some support or some resistance, and now we potentially look for the support at those levels. So percentage-wise, from our current price to that next level at about 16K, 13%, to that next low is about 33%. So if we look somewhere in the middle at about that 25, I'm looking at about that 14K, which are those previous highs. So anywhere in this sort of zone here between the 12 and the 16 gives us a nice move down of about 25%. As for ETH, it's sitting at 970 after last night it went to $880. ETH to the downside can take on probably somewhere as low as the 400s, maybe lower, but let's just leave it at the 400s before people really start to shit themselves. And we go between 500 and this level here of about $800. Now I've got this little zone picked out, and I've talked about that many, many times. The reason being is this was the zone here in November, and for Bitcoin it was October. Altcoins had it just a little bit later. It's basically the zone after the market broke out of the accumulation. You had the little breakout here, the retest of the highs, and then it really didn't come back and test any more price ranges from this zone. So that's why I'm eyeing that zone off as a potential support for ETH, for Bitcoin, for altcoins coming back to those prices prior to the breakouts to test those price zones. We need to test that structure to see if there is support at those prices. We've broken down past the 200 weekly moving average, and we know in the past ETH has done that plenty of times. I just did a rough guide here of the breakdown, and I suspect it's probably from this bar here or November 2018. We don't have the 200 weeks of data there to do it, but you can sort of see that's where the market would have probably tracked. And the time frame for the market to come out and break past it was 87 weeks. So it stayed under this zone with a couple of minor breakouts lasting anywhere from about 7 or so weeks to a couple of weeks above that 200 week. Overall, about 87 weeks. So just short of 2 years under this 200 week moving average. So if ETH does it and stays under here, it's probably not going to come above the 200 weekly moving average for a period of time. And we have to wait for Bitcoin to also break above that. So for ETH, I think there's plenty of time to be dollar cost averaging into this. A 90% drop would take it down to about that $500 level. So this is our green zone, the measuring tool right here, and then into this zone about that $560, or half price from where we currently are, about the 500, 550. That's going to be your roughly 87 or 86% from the all-time high. So these are some of the numbers that we're trying to bring into play here for a low, which is why I'm not buying all of my ETH or all of my Bitcoin at these levels, but I am chipping away at it because I think that I think the value is here for adding to my longer term portfolios. We're under some significant levels with some volume coming in. And of course, I can always be wrong and these levels don't come in because a lot of people are looking at these levels. So that doesn't necessarily mean they have to be there, which is why we start to chip away at it. And if they get to those levels, then we go in a lot heavier. So ETH to those lower prices, potentially, we need to have some targets here. And these targets start to also come together on the total cryptocurrency market cap. If we measure down from this level down to the top, so this is that zone again around the December because the altcoins took off a little later. That zone is about 40% down. So if we go to the top of this little zone here, that's about 52% down. So throw it on log so you can see a little better. That's where it is there. So now that we have all of these prices, where the Bitcoin, ETH, altcoins are currently sitting, how much is in stablecoins, how much comes off stablecoins, which we've seen in the past hasn't been that much, and how much further down can each of these cryptos go. We can go back to our figures here, which you saw earlier in the video, and just understand what it is that I'm doing here rather than just sort of take this at face value and see where the maths is coming from here. So Bitcoin down about that 25%. The current market cap we saw was about 360. I'm rounding it up. So 25%, a quarter of 360s, 90 billion, 270. That's where Bitcoin's going. If we break down about 25%, and that would then give us a price of roughly, which we can see here, in at about the $13,000 or $14,000, $13,500 to $14,000. Okay, so that's why we have this price here. ETH could easily do another 50% off. It unfortunately is just much weaker. The market cap is 120 billion, so half of that, 60. Stables probably going to sit somewhere similar, about that 150. We've been tracking them. We saw they were at 160 a few weeks ago, and now they're only at 155. So not much is coming out of stables at the moment. That can change. So the total for all of these, if I've done my maths right, 330 and 150 is 480. Current alt market cap is at 160 billion because we're minusing the stable coins. So roughly speaking, we are total 330, give or take a little there. We're looking at 150 off that. I'm giving a round number here of about 160 and then taking 50% off that. So that's about 80 billion. And I think altcoins could probably do a lot more, but let's go with this for 50% off. That gives us a alt of 80 billion. So then if we add these two together, 480, and the 80 billion left in altcoins, not including stablecoins because we've already included stablecoins here. Alts, stablecoins, 560 is about 30% down from where we currently are. So that's how we get to that. And it's not 30% on Bitcoin, 30% on ETH, 30% on alts. You can see that it's more heavily weighted to a bigger drop on ETH, a bigger drop on alts, and a smaller drop on Bitcoin. But Bitcoin is, of course, the larger of the market caps. So we lose 30% right there down to 560. How does that line up with our support and resistance zones? Because that's the most important. We've seen that work time and time again. 30% down brings us out to about the 550, 560 zone, which is this little zone right here that I'm waiting for. Because I think it's a great area as well. Doesn't mean it has to happen, but a lot of people will be looking at these tops here. You can see this top here at about 390 billion, call it 400 billion as a round number for the total market cap. And maybe it just doesn't get to 400 billion and people start buying up just that little bit sooner. For the total market caps, it's the Bitcoin, the ETHs, and then money going to maybe Binance and into the stable coins. So that starts to hold the market up just that little bit higher. But either way, we're never going to buy the bottom. We're never going to sell the exact top. If we can start to chip away heavier into those zones, then that sets us up for the next bull market. This is where the cryptocurrency millionaires are made, like they say, at the lower prices, not at the high prices. They're made further down here for the majors. And then for altcoins, that's another game on its own. I'll look to be playing that on the momentum trades out of the lows because we just do not know for altcoins. And you could almost throw ETH and Bitcoin into that basket as well. What happens if they don't? We have to have the outlook that Bitcoin and ETH will make it if you are to take on this particular theory and look to buy cryptos as they start to enter these lower oversold zones. So that's the aftermath of the crash last night. And as I'm filming this market is coming down to test that $800 billion level again. The lows at $760 billion. And of course, the further we go down, the closer we get towards this little target zone here of November, back between around the $400 and $600 billion total market cap. Make sure you guys have liked and subscribed to the channel. Stay up to date with the crypto information here on the channel. And of course, check out the links to Bybit, $4,100 of sign-up bonuses. Spread your risk out when it comes to your trading and investing. Don't hold everything on exchanges. Don't hold everything on those interest-earning apps. And of course, join us tomorrow morning, Monday, live streaming with our members, TIA Lite and Premium. Links are in the video description. $100 off TIA Premium. That special is going on with the Bitcoin Crash 100 coupon code. Check them out. I'll see you guys at the next video, or potentially on another mega marathon live stream like we had last night, nearly 6 hours there. So make sure you have subscribed and hit that notification bell icon. Check out the videos that are popping up now, and I'll see you guys at the next video. You know what to do. Till then, have more fun to get more done.